3 handout. See tonight. To textbook problem. Three, the practice exam. And 4, I'll send out the Chapter 3 exam, and it will be due on, I'm going a week plus a day on all these. It'll be due on March 17th. So this is what we're going to do in class. And then after class, I'll send out the Chapter 3 exam. Questions? Okay. Let's go ahead and get started then. All right. I don't think we finished the Chapter 3 handout last time. We stopped on page 7, if I'm not mistaken. That's not the handout. Give me a moment here. I think okay, yeah, I think we stopped here on the we're on page 7, problem 7. Okay. So they purchased a truck for $20,000 cash. As I say, with $20,000 or whatever, on January 1st, 2021. Okay, so they spent the cash, they bought the truck. Now we're going to expense this over time because this truck is going to last for more than a year. In fact, it's going to last for 10 years. So here's a question. How much would you expense each year? And you can either answer or put it in the chat if you want. I'll try to adjust my screen here. Okay. No one? Oh, someone's got to get this. This is too easy for you guys not to get it. How much are they going to expense each year?
Is it 1,200?
Nope.
2,000.
2,000.
Yeah. So let's see here. So the cost was 20,000, and we're going to divide that by its life of 10 years. Oops. So it'll be 2,000 a year. And again, the reason we're spreading this out is that this thing is we're going to use it for more than just 1 year. So we're going to expense it over however many years we're going to have it for. Now, the weird thing is the journal entry for this. I think I talked about this. I can't remember, to be honest. The way we remember it is at the end of its life, it's going to be dead. A little bit morbid, but DEAD. You want to remember what that is? Did I talk about this? I can't remember. This is how you remember the journal entry, though. DEAD. Well, let's first think about, these are adjusting entries. And I think I talked about this before. I think it's up here somewhere. Oops. Okay, so adjusting entries either have a revenue or expense, so they have one or the other, and they never have cash. So the adjusting entry never has cash in it. Okay, so in this case, are we looking at a revenue or an expense most likely?
Expense.
Yep. So this first one here, the DE, the D stands for depreciation expense.
Mhm.
$2,000. And the AD stands for
Accumulated depreciation.
and that's the weird count. It's not a weird count. It's just it's a what they call it's a contra asset. It's a contra account. And there's a general name for it, but this is what they call a contra asset. Oops. Asset to the equipment account. Oops. I put these in parentheses because these are actually not part of the journal entry. But, it goes against the equipment account. Basically. So it's called a contra account generally, and in this case, a contra account to the equipment. Contra asset. Okay, so this is what this would look like on the balance sheet. It would look like this. The equipment. Would be different? 20,000, right? 20,000. Minus accumulated depreciation. And so then we get the net equipment would be 18,000. So this thing would have a value of 18,000 a year end books because we used it for the entire year. We bought it on the 1st, So we used all through 2021. And so this would be what we would show it for on the balance sheet, would be the value. I don't think I went over why we do this. You know, a reasonable person would say, well, why do we use this accumulated depreciation account, right? I mean, this goes against, you know, the asset up here, right? So, you know, why don't we just I do there's something wrong here. You know, if this goes against this equipment account, why don't we, instead of, you know, the equipment account has a debit, why don't we just debit or credit the equipment account until it goes down to 0? I mean, you know, why not? And there's actually a reason why we do it. I'll show you that right now, actually. You don't have to write this down. So let's just put up here, equipment cost. Okay, so we have two pieces of equipment. We have equipment A. Equipment B. Equipment A costs $120,000. Equipment B costs $6,000. Estimated depreciation on equipment A is $115,000. So the net equipment, sometimes called the carry value or the book value. Would be $5,000 each, right? Okay, so we have equipment A. Equipment B. Okay, which piece of equipment is probably older, equipment A or equipment B? Now, notice that they both have the same value. So if we were, if you're just looking on the balance sheet at what the net, net value, is, okay, they're the same. Which piece of equipment is older, most likely? Equipment A or equipment B?
A.
Okay,
Yeah, I would say 18.
yeah, a big chunk of it's already been depreciated. This has been depreciated for a while. It started out at 120,000, now it's down to 5, as far as the carry value. Whereas B, it was only $6,000, but there's only 1,000 out of it, so it still has most of its life left, most likely. They've only taken 1,000 out of it. So even though on the balance sheet, they're going to look identical as far as the total, give you a little more information. Now, notice something too about A. Which is older, A, and which one's more expensive? No one? Oh, come on. That's right, it's A, $120,000. So here's the thing. If you're looking at the balance sheet on this, you're looking at this thinking, you know what? This equipment A is going to have to get replaced pretty soon here, right? This thing is near the end of its life, and it's an expensive piece of equipment, whatever it is. So this one, if you're looking at a balance sheet that had this on it, you'd be much more concerned, thinking, okay, there's going to be a big cash outlay or some kind of an outlay for a new piece of equipment because this one is old and it's very expensive. Whereas this one is fairly new and it's not that expensive anyway, or relatively not expensive to equipment A anyways. So this one would be something that is newer equipment and less expensive, that when you do have to replace it, it's not going to be as much. So again, this is all the stuff that you would not get if you just had, if you just took it right out of the equipment account. So this is why we keep the accumulated depreciation. So it kind of gives a little more information to people reading. Just as far as what you're going to be spending on equipment, how new is the equipment, all that kind of stuff. So, if you think this is kind of weird, and it is, have a contra account, that's the reason why. Okay. Let's go to number 8. How much are we going to depreciate each year?
$2,400.
Yep. Perfect. So equipment cost is 12,000. It's going to last for, we estimate it's going to last for 5 years. 2,000. Oops, $400. So let's be a depreciation. Let me do something here. Give myself a little more room. Okay, so this will be how much we depreciate this thing per year. Our morbid journal entry. Oops. His life's gonna be dead, depreciation expense. Accumulated. Okay, and down here we would have equipment was 12,000. 12,000. Minus the accumulated depreciation. So we would have net equipment. And again, this could be called the carry value, sometimes called the book value. The same thing. 9,600. Check it. 12,000. Okay, so 9,600 would be the actual value. So this would be the value in 20. I want to do something here. So in 2021, this would be the carry value of the book value. Now the next year, let me get this one. We don't need that. The next year, everything would be the same, except this would be 4,800. Oops, that's not right. 4,800, and the net value would be some other number, 12,000. Oh, I guess 7,200. So this would be the book value in 2022. So you can kind of see what's happening here. You know, you notice that the equipment account is going to stay exactly the same. That's going to stay the same every year. The only thing that's changed is, this accumulated depreciation is going to change. Because how much is after 2 years we've depreciated it 2 times the 2,400. By that amount, and so it's just going to keep going up until after 5 years, I think, isn't it? 5 years. After 5 years, this net equipment value is 0. Question on that thing? So it is kind of strange in that the account itself, the equipment account, doesn't really change. It just stays the same. But the depreciation keeps going up. The accumulated depreciation keeps going up until finally this is going to be, after 5 years, there'll be 12,000 accumulated depreciation, and this will be 0. Question on that thing? Okay, and it is made a little bit, strange because of that. Accumulated depreciation doesn't directly come off the from the asset itself. It's a contra. So, okay. Go to 9. Okay, 9. Beginning inventory of office supplies. Total 100. Additional $400 worth was purchased. And at year end, only 70 of the supplies was left. See how I color coordinated all those? See? Okay, so I think I'll be quiet and see if you guys can figure out how much of the office supplies were used. And we
Is
will,
it 430?
yeah, I was gonna say we're gonna sit in awkward silence, but that wasn't very long, was it? All right, yes, you're right. It's 430. So it's kind of like this. So beginning inventory. Was 100. Purchase of supplies. I should probably put it office supplies. I think put office supplies in here. On the top, you can just put supplies if you want, but I'm going to do it the same way we have it up here. And this is kind of a classic inventory case. You have a beginning inventory. You purchase some of them. You purchase some more during the year, and you'll have a total available. So I'm gonna put a plus in front of there. Okay, so total available would be, and so what we mean by this is, and this is any inventory problem. What we mean by that, what's available is, I should do that. What we mean by that is this is the most they could possibly use, right? This is the most of the office supplies that they could possibly use, and most that was available to them was 500. Okay, so we send somebody out and they count the ending office supplies. If you think about it, the ending supplies were what was not used, right? I mean, they didn't spell it correctly. So this is what was not used in the, well, that one I probably can't read it. So $70 of it was not used. And that was the ending supplies. So the office supplies used was absolutely correctly stated at $430. So this is the office supplies used. Okay. What's going on here? How does let me pick a shade? There we go. Okay. So this is that. So how much the supplies were used? 430. How beautiful that is now. All right. It's probably more confusing than it needs to be, but all right. So, all right, so let's say, so these are supplies. We bought the supplies. That is phone is gonna get. We got one of those door things, those stupid doorbell things, and every time a squirrel runs by, we bothers us. Anyway, so we're gonna make the entry for supplies. Now remember here, adjusting entries. They have either revenue or expense, and they never have cash. We purchase these supplies, and presumably we, they've been done on the account, but at some point we have to pay for them. Anyway, the cash has changed hands probably long before year end. So this is, we never have cash. You're never buying more inventory or anything like that. So you're not going to have any cash in this one. Now, are we going to have a revenue or an expense? What do you think? You can put it in chat if you want.
A revenue?
Actually, it's going to be an expense. This is money. This is going out. Now, if we were selling the supplies, it would be a revenue going. I don't think we're selling them. It just says that they were used. If they're just plain office supplies, they're probably just using them. All right, so this would be an expense, probably like a supplies expense, something like that. And this is it's a little bit tricky in that we're actually not. It's not cash going out the door. It's supplies, so envelopes and all that kind of stuff. So supplies expense for the 430 that we used. What's going to go on the other side?
Just supplies.
Yep. Perfect. Yeah, supplies, it's an asset going down. Yeah, I'm not being careful. By 430. Okay, so this is supplies. Or supplies, as I like to call them. See, other instructors don't invent words for you guys. I go the extra mile. I invent new words for you guys. Okay, so, and the supplies account is really where most of this kind of takes place. You'll notice they started out with 70 in it. I'm lying again. They didn't start out with 70, they started with 100 in it. Okay, so I'm not an lazy. I make up new words, but I lie. Okay, so this is 400. And so this is how much was in the account. That's where the 500 came from. That was what was in supply. So this is the beginning. These are the purchase. That may make it more confusing. I don't know. And so we had a total here. This 500. This would be the available. And we made this journal entry. We had the 430 that was used. And so the ending would be 70. And again, that's what we want it to be. You know, here's the 70. We want it to be 70 because that's what we counted up in our inventory. So this is the so I had 500 in that account. We go and count up, there's only 70 left. So we have to take out 430 out of that account. You do not have to make a journal entry for the 70. It's automatically there. There was 500, subtract 430, and that's what's left over is the 70. And the supplies expense would just be the 430. In hindsight, I should have put these two in a different order. This is 430. We wouldn't have to have these crossed lines here. Note to self, put supplies expense first next time. Okay, so this is the supplies account is being adjusted. We had a beginning of 100, bought another 400. This is what was available, but we only had 70 left. So we went out and did the ending inventory, and we said 70. So we must have used this 430. Question on that thing? Okay, let's go to number 10. Number 10, I'll try to be quiet. Let's see if you guys can figure it out.
$120.
Yes. Yeah, the beginning. Oops. Cost available, we 170. Any office supplies, these were not used. It's 50. Now it tells us the office supplies used. Is it 120? Yeah. So we could have used 170, but we didn't. There were still 50 that were not used. So we must have used the other 120. Okay. And the adjusting entry is the same. Supplies expense, expenses are always debits. And we're not spending cash here, but the supplies are going out of the place. So while it's not cash going out, it's the different assets, supplies. I should probably put that as office supplies. If you put supplies, that's fine. And I'm going to put the supplies, office supplies. Oh, you know what? If I put office supplies expense, I know I'm not going to fit it in here. Let's say supplies. Oh, I could probably find it. All right. Okay, so supplies expense was the debit, 120. In the supplies account, we had 30. We bought another 140. So there was a total sitting in there of 170. That was the available. We used 120 of it. I switched these two around just so they're so my little arrows don't get crossed here. And so this 50 though, this is the ending amount, and color coordinate that. So that 50 is this 50. You know, this is what we expect would be in that account. This is what was not used. We still have $50 worth of them. So 170 is too much. So we took out 120, and then this is just left. Any question on that? Okay, I think I'm going to make an executive decision here. We're gonna do textbook problem 3-1A. I think we're gonna skip that. Just for time. So I think we'll jump right into the practice exam. I'm gonna send out the practice exam. So we can take a break now. Why don't we do that? Take a break and be back at, let's say 7. And I'm gonna go ahead and send you guys the practice exam, and we're actually going to do the multiple choice together a little bit. You'll have a chance to get some extra credit points on it. So if you want to take a break, you can. I'm gonna go ahead and send out the practice exam. Let's see. Excuse me. Okay, what we're going to do next is you should all have the practice exam now, the Chapter 3 practice exam. Is you one that did not get it? I sent it out in the email. It's also available in Blackboard. I'm playing with stuff here. It's also available in Blackboard under the course files. So is there anyone that did not get the practice exam? So here's what we're going to do. First, we're going to start in on the multiple choice questions. And here's why. The multiple choice questions, the class can earn extra credit points that will be added onto the test. And here is how we do it. I'm going to change cameras here. So multiple choice questions, practice exam. Oh, this is the problem we were going to do. But anyway, practice exam. If the class gets 50% right, 3 extra credit points. You add to the exam. If you get 75%, let's say, well, yeah, these are my. So if you get 7 out of the 10, there's 10 questions, so you get 7 out. If you get all of them right, so this we added to the Chapter 3 exam. Okay, now so I got the polling up. Hopefully you guys can see it. So whatever's question 1, question 2, so you guys get the idea. So in the polling, it's anonymous. Polling. There's only one L, I think. So do not be afraid to. Someone's going to see your answer if you think it may not be right or whatever. It's anonymous. So as you go through these, there's 10 multiple choice questions. Fill them in. Well, maybe you guys a little bit of time. Maybe at 7:15 we'll cut it off, and whatever you guys have, we'll go with that. But anyway, so this is the you get extra credit points, and so as you go through the multiple choice questions, so whatever you get for question A, question A, question 1, question 2, 3, and so forth. If you pick A, B, C, or D, or whatever, go ahead and enter it, and we'll see what the poll comes up with. All right, and let me. And then once we're done with the polling, then we'll go over and do the questions are, and then we'll go over the rest of it too. But do the multiple choice questions first. Again, guys, the voting is anonymous. Anonymous. It's anonymous, so don't worry about if you know, you may not have it right. Just do your best with it, and don't be afraid to put it in. Excuse me. Okay, are there still people working on the poll? If you need a little more time, let me know, either in the chat or say something, yell at me.
Yeah, I'm on the last one.
Okay, all right. Okay, is anyone else still working on it? Anyone else? Yeah, if you put it in the chat or in the, you can just say it if you want. You're still working on it. Okay, I'm going to close up the poll here. Okay. Okay, well, the results are in, and we'll go through these and let's see where. Good. Okay. Okay, so first one. It looks like the poll. Most people pick D, and D is correct. Yeah, so they have the 6,500 worth of supplies. And there's only 100 left. So the question is, how much have they used? How much have they used of the supplies? Minus the 1,000 that were not used. The ending inventory. Just say ending supplies. And whatever's in the ending inventory or in the ending supplies is not used. So let's go 5,500 that were used. Try that again. So 5,500 were used. So this is what we're going to expense is the 5,500. And so the supplies expense. Now looking at these, this is one of those things that if you look at them, expenses are always debits. So when you look at these, and this isn't to make you feel bad or anything, but really the only two choices you had were either A or D. If you know that expenses are always when I teach people taking the CPA exam, and one of the things we always do is say, okay, which one of these are possible? And expenses are always debits, so the only real possible answer, if you know that, is these, the A and D. So this is what you're choosing between. And you always expense what was used. And so whatever you used of whatever it is, it could be prepaid insurance, it could be whatever the amount you used is what you expense. Number 2. You guys got that one right. 2 for 2 so far. Unearned revenue is a liability. Adjustments for unearned revenue. Decreases the liability. Yep. And the liability it decreases is unearned revenue. And increases is regular revenue or earned revenue. Okay, you are 3 for 3. Okay, so let's take a look here. Store paid $18,000 for 6 months rent. Prepaid rent is the full amount. Okay. Oh, so how much the rent was used? Yeah, the first month. So how much is it per month? So prepaid rent asset 18,000, and this is for 6 months. And so July 1st, so this means that 1 month has gone by. Hopefully you guys can do this in your head. 1 times 3,000 is 3,000. So this is what we're going to, so the used amount is what we're going to be looking for. On this one, 3,000, that's what we're going to expense. And we're not going to expense the full amount. Hey, this is it. Yep, you guys got it right. 4 for 4. Very good. 5. If I shrink these up right. Try to get them all on the same page here. The company fails to adjust accruals. So this is a tough one. But apparently not for you guys. You guys got it right. The company fails to adjust accrued revenues. Okay, so the journal entry for that would be what's wrong here? Why is this? It shouldn't be this big. Okay. So the journal entry would be to debit accounts receivable. Credit revenue. So accounts receivable will be going up. And revenue will be going up. But they say, what if they fail to do it? Well, their revenues are going to be too low and their assets are going to be too low. So assets will be understated and revenues will be under. So D is correct. You guys are doing fantastic. This one's tricky. Okay, so they had 2,800 in the prepaid insurance, 1,200 of it had expired, so how much was left? You guys got that one right too. Yeah, so 2,800 minus what was used. So prepaid insurance had expired, so it had used 1,200 of it. So the ending balance would be 1,600. Six for six. King supplies was 1,500. Purchase. Oh, it's a little bit different because they now they say what was the supplies used, so what was left over. It's a little bit different than we did for the journal entry. So they had available 4,000. It's 4,400, I should say. The used was 2,900. So subtract it out, and that'll give us what the unused was. So this is a little bit different. That this is the pretty good. You got the whole class got it. Okay. Okay, so 3 years. Monthly depreciation expenses. 7,200 divided by, well, 3 years is what, 36 months. You guys got it right. I don't want to do this. So it's 36 months. So 7,200 by 36. Okay, so you guys have at least +4 going. Oh, wait a minute. I'm on the wrong one. Oh, not all you got it. Most of you got it though. So now be careful here. They say they ask for the monthly. You know, so how much is it per month? So it'd be $200 per month. If it was yearly, it would have been the 2,400. Okay, number 9. Ooh, that was a tough one. You guys got this one wrong. Darn it. Okay. So equipment in the books last 5 years. It looks like everybody got that part. So 9,000 divided by 5. Now, here is where what the balance will be for balance sheet for. They're not asking for the balance of the account, they're asking for the accumulated depreciation. That's a tricky one. So the 7,200 would be the net equipment or net carry value or net book value. But actually this, the 1,800 is what would be in the accumulated depreciation. That one's tricky because you normally be thinking about what is the on the balance sheet, what would be the balance for the total thing. Yeah, so, darn it. Mary Richards. Hey, that's that Mary Tyler Moore show. Mary should perform $500 of services for a client, does not bill the client as of the end of the period. Okay, so they did services, so they're owed revenue, but has not billed them yet. Answer there is this one. It's not unearned because here's why it's not unearned. Not only haven't they paid us yet, we haven't even billed them yet. So no cash is unearned is when they pay us ahead of time. So it's going to be accounts receivable. That part is correct. But is this going to be plain old revenue? Mary earned the revenue, but just has not billed the client yet. So she has an accounts receivable, and she has plain old revenue. 8 out of 10, not bad. +4. Yeah, those are tricky. Oops. Do that. Any questions on those? That's not bad. That's not bad at all. Usually if I do that in class, I'll usually get like these are around 60, 70%. So 80% is not bad at all. And you know, the fact that they were the last 2 problems, you probably didn't have enough time to work on. You know, that's not bad. So anyway, so it'll be +4 on the test, and then let's go ahead and do the rest of it though. We'll just kind of do the rest of it together, and yeah, then we'll go be done with it. Okay, stop sharing results. Okay. Okay, let's go back to the share screen here. Okay, so let's go down to change camera. Well, I don't know if you guys are happy with that. I was very happy with that. It was very impressive. Okay, so let's go to number 11. For the journal entries on 12/31/2021 for the following items. Okay, so big question, how much of the supplies were used?
$540.
Could be, I asked a question I realized I don't know the answer to. 540, so 30 plus 5. Yep. 540. Okay, yeah, so so the beginning was 30 purchased. Okay, so we purchased 510, so that was that. The ending, in other words, what was not used. Okay, so what would the journal entry be? And again, it's not going to be cash. And we're going to have a revenue or an expense.
Supplies expense and supplies.
Yep. And yep. Perfect. And for the amount that was used. Supplies account is going down. Expenses, remember, are always debits. You know, in that way, these journal entries are, you know, in a weird way, they're kind of, they can be somewhat easier because you always have to have a revenue and expense, and you always know what revenues and expenses are as far as debits and credits. So if you get the right one, you know, right expense or debit, expense or revenue, you kind of know at least where the debits and credits are going. Yeah, so whenever you see expense, debit. Okay, September 1st. All right, all these journal entries are made on 12/31. I should probably put that somewhere. Oops. Well, they're all made at the end of the year. Okay, so the one-year insurance policy was purchased for $1,800 on September 1st. The entire policy was recorded as a debit. Okay, so how much is insurance? How much is the insurance per month?
$150.
So prepaid insurance was 1,800. Divided by 1 year, 12 months. Now it's tricky. I think I'm gonna put the months up there. When I do the, when I make the test, I'll put the month thing up. But how many months did they use it for?
4.
Yes. Good. And they used it for all of September. So mostly go out on September 1st. So they use okay, so 600. Okay, so 600 of the insurance was used. So what's the journal entry going to be?
Insurance expense debited 600 and prepaid expense credited 600.
Correct. So it's gonna be an expense and expenses are always debits. And prepaid expenses, they'll say prepaid insurance is fine too. We also, so it's an asset going down. And by the way, you'll see these. The important thing here is the prepaid. So don't worry about it. Is it expense or prepaid insurance or whatever? If you put prepaid in, it's fine. That tells anyone looking at it that's an asset, and that we've used up some of it. Okay, 13. Oh, did we do one of these? I can't remember. Okay, so employees are paid a total of $3,500 for a 5-day week. Friday, December 31st, 2021. Is that right? Oh my God, I don't know if that's right or not. It ends on a Wednesday. So the question is, on Wednesday, this is on a Wednesday, how much do we owe them? Well, first of all, how much is it per day?
$700.
Yep. And so on Wednesday, how many days do we owe them for?
Three days.
Yep. So we owe them for Monday, Tuesday, and Wednesday. So what we're going to do is say, okay, it's 3 days times $700 a day. So we owe them what, 2,100? Okay, so what's the journal entry going to be? Revenue or expense?
Would it be wages expense?
Wages expense, and the nice thing about expenses, well, when it comes to journal entries anyways, is that they're always debits. Okay, and what's gonna go on the other side? What is it when you owe somebody? So we owe these employees. This is what's owed to them. What kind of account is it when we owe somebody?
Payable.
Accounts payable.
Yeah, accounts payable, let's say probably wages payable, but some kind of a payable. Absolutely. If you put accounts payable, that's absolutely. You can definitely put, the important thing here is it's the payable. So wage payable, if you, again, if you put accounts payable, that's absolutely. The important thing is that it's a liability. So there's a liability going up, we owe them. $2,100. More are there left? Okay. What idiot made this thing? All right. Oh, 14. How much are we going to depreciate? This is the same one we just did. Sorry about that. Okay, how much is it? How much are we depreciating per year? What you guys are thinking? We already did this one. I think the last problem we did, the last problem we did was like this. The cost is 12,000. And it's gonna last for 5 years.
2,400.
Yeah. One of the things when you do accounting is that, you know, because so much stuff worked around months, is that a lot of times you try to find those numbers that are go to 12, you know, nice and even. So you end up using things like 12,000, 24,000, but you know, 36,000, those kind of things, or you know, 30,000, right? You know, anything that goes cleanly into 12, you generally are going to use those quite a bit. Okay, so what's the journal entry going to be?
Depreciation expense, debit 2,400, accumulated depreciation, credit 25.
Yep. Depreciation expense. Oops. 400. And accumulated depreciation, that's a strange account. We'll go against whatever the asset is. Two more. Okay, at year end. 2,580 of the unearned revenue had been earned. So is this going to be a revenue account or an expense account? So people pay this ahead of time. And we put this on the books as a liability, unearned revenue, but now we've earned it. So we actually did the work. So is this going to be a revenue or an expense?
Expense.
It's just going to be a revenue because we did the work. So now, in other words, whatever they paid us, we have earned this amount. You know, we've earned 2580. So we're not going to give that back to them certainly. So that's where we're going to take that off of the unearned. So it's going to be a revenue. Now, revenues are always, expenses are always debits. Revenues are always
Credit.
Yep. You can put this into, you could think about it as earned revenue. Or just plain revenue is fine. For 20. And what's gonna go on the other side? It's not cash. You know, they paid us cash a while ago. So it's not cash, but what's it gonna be on the other side?
Unearned revenue.
Yep. So unearned revenue, it's a liability. And it's going down with a debit because we don't owe them 2580 anymore. We did the work, or they did, or whoever did the work. You know, when they do the work, they don't owe them anymore. So this is taking off the liability, saying, look, we don't owe you for 2580, but we already did it, and we're going to recognize the revenue for it. Uh, 16, this is similar to a multiple choice question we had, I think. Revenues of $1,230 have been earned, but not billed at year end. So are we gonna have a revenue or an expense? Oh, come on, you guys are toying with me. You know, revenue or expense?
It's revenue.
Yeah, the revenue. And revenues are always,
Credits.
yep. Revenues are in credit. I should put it in. I can put it up here too. So revenues are going to be credits. And now that I need to put vowels in there to spell credit. Okay, so we're gonna have revenues 1,230. So that is the credit. Now remember, there's no cash so far. We haven't even billed them for it. And by the way, the reason why we haven't billed them could be any number of reasons. It could be that we haven't completed the entire job yet. If this was a $3,000 contract and we only had 1230, we're not going to bill them yet until it's done. But we will still recognize how much we've earned of that contract, even though we're not going to bill them until it's completed. It might also be something we just don't do billing until the end of the month or something too. First week of the next month or whatever it is. What's going to be on the other side? What is it when you do work but you haven't been paid yet? In other words, somebody owes us. What do we do with that? What kind of account?
Unearned revenue?
No.
Accounts receivable.
Yeah, probably accounts receivable. Yeah, unearned revenue is kind of the opposite. That's when someone pays us ahead of time. In this case, they haven't paid us. They owe us. They haven't paid us. So this is they're both timing differences. Accounts unearned revenue and accounts receivable are both timing. It's just the timing of when the payment comes in. So this would be accounts receivable. Oops. Asset going up. They owe us more money now. And whenever we do get around to billing them, should pay us. Yay, that's it. Okay, so this was, and just so you know, this is the, I think the toughest chapter in the book. Yeah, it just is. Yeah, I think I told you guys, maybe I did. These adjusting entries are at the end of the period. A lot of times they're called, they call it doing the end of the month closings and stuff like that. And this is like the hard part of accounting. At the end of the month, tying up all these things that are even at year end, it's even worse. Tying up all these kind of loose ends, how much inventory do we have? How much of this do we have? How much insurance do we use? All this kind of stuff. And that's what takes a while. So that's why people who are accounting, they talk about doing the closings, and that's what they're talking about is that how do they get to those adjusting entries? Those are the things that are difficult to do. And they're difficult even for people that do it for a living. I mean, people that have done it for 30 years, it's difficult too. And I think I told you guys, maybe I didn't, but I was an auditor for about 3 years as an auditor at Navistar and US Steel. But I remember we had Navistar, and there was a journal entry, an adjusting entry at the end of the period that they put it in, decided it was wrong, took it back out, decided it was right, put it back in, decided it was wrong, they put it in, took it out 6 times. The same entry, because they they thought it was right. Actually it was right. It was a correct entry. When they thought it was wrong, they reversed it out. The correction of an error. And then they put it back in, correction of an error. They kept putting it in and taking it out because they were unsure of it. So this stuff is hard. I mean, it's hard for people that are in the business. So anyway, I will be sending out the exam hopefully by tonight. I'll be sure to get it out by say noon tomorrow. It'll be due a week. It'll be due a week from tomorrow. I'll be doing the 17th. But I'll try to get it out tonight. I want to go through it and just make sure that I didn't do anything stupid on it. Any questions on any of this? So I will put a submit for the handout we did for the practice exam. And for the exam, which I'll be sending out. Everything will be due a week from tomorrow. And I think that's it. And whoever, I'll go through the class attendance, whoever attended will get the extra credit points. Any questions on that? I kept you kind of late tonight. Got a couple hours of doing accounting, looking at a computer in the morning. So anyway, well, if you don't have any questions, then I will sign off. Good night. If you have any questions, feel free to ask me. And I think you guys know that I have office hours on Friday. But you can also contact me anytime you have tutoring. There's also tutors available. If you look on the Blackboard, there's a tutoring schedule in there too that you can, if you feel more comfortable talking with the tutors, they have their time slots in that they're up and working. So if you have any questions, feel free to ask either the tutors or myself. Okay. Well, good night, and I will see you in a week.
Thank you, Professor. Have a good night.
Thanks. Have a good one.
Good night.
Good night.
Good night, Professor.
Good night.